Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So in today's video I'm going to talk about one company that we have not talked about in this channel at all, and this is one of the oldest software companies out there. This is when I was doing my degree, when I was doing my A-level, I used some of the software this company has created. They've been around for a very, very long time. So I'm going to give you a bit of information. I'm going to give you the financials, the estimation, the estimates from analysts and so on, what they expect the company to do in the next few years. Then I'm going to show you the valuations. Then I'm going to show you what my plan is, if I'm basically going to add this to the portfolio or not. Now, talking about the portfolio, I've not added any new money yet. I've actually got a bit of money in there, so that I will be purchasing some stocks today. But just today, this basically just from this time yesterday, is actually gone up almost to £2,000, which is absolutely over £2,000, which is absolutely crazy. And a lot of that's to do with the Fed and everything else. And today, one of the companies that's killing the market is the Broadcom, which I'm going to talk about in a second. But before we do all of that, it would be really wonderful if you can join us in the Discord, where you get access to the Patreon account, where you get access to all of these things, and you get access to the Discord. It costs you 15p per day, and you get access to all the buys and sells. You get access to all the brothers who are actually sharing really good practices. So it will be absolutely wonderful to have you there. And if you can't do that, just like the video, subscribe to the channel, and of course join this journey. And inshallah, if you gain something from it, of course let your friends and families know. Inshallah, what we're trying to do is buy Sharia compliant stocks and inshallah hold them for the long run. There's a lot of people out there very negative about the stock market and everything else that's happening, but we're going to try to keep it halal as much as we can. Only Allah knows what's best. I'm not basically a scholar or anything like that. I will continue to make mistakes just like everybody else, but every single day I'm trying, basically I have good intentions inshallah, and I'm going to do the best I can to share my journey with everybody else. Now, talking about Broadcom basically was one of the stocks that we talked about this week, and since basically yesterday it's actually gone up 9%. And I was wondering this morning, what has changed, what really happened for this stock to hit that basically 9% up just in one day. So I just want to share with you some of the news that I've seen since then. So Broadcom wants you to take advantage of second wave of AI. That's markeless, and they have increased their price. And I think I mentioned this yesterday. There you go, 1,400, right? So that is right now. If you go back to here, is getting there because of this 9%. So I don't know what they're going to do next couple of days. So another one that came up today, okay, AI infrastructure and innovation. Now the company came out yesterday and they talked about AI infrastructure innovation. So they're now trying to basically build AI into every single network device that they have. Okay, so in the long run, this company is going to benefit massively when it comes to AI, just like Nvidia. So they talked about that. There's quite a bit of information. If you're interested, I'll post this with the video, but you can pause the video and have a quick read. So this is some of the things they talked about. There was a massive article. I've read quite a bit of it. I just need to finish that first, and then maybe I'll share with you guys if there's anything important in there. But yeah, so some of the things they talked about is basically the fact that they now basically add in every single device they have, okay, all the Ethernet cables and the switches and all of those things will have some sort of AI play. Now the next one was this company. So this, they said, because they've upgraded because of AI infrastructure. That was after that conversation. Oppenheimer also exactly said the same thing. So this one, let me see how much they actually upgraded to. Okay, so 1,500. This one was Oppenheimer. Let me see what it was they've upgraded to. Also, they haven't given a price. That they basically said it's outperform ratings. So it's interesting, really. I mean, they reiterated some of the points the company had made on that speech that they've done, that event that they had yesterday. So yeah, anything that has an AI in it right now is going to the moon, and we will see where we are by the end of this year. And this is one of the main companies that benefiting from. So let's now talk about Oracle, which is the company that we want to talk about today. This is one of the companies that have been around for quite some time. It has a forward PE right now of only 23. Right, so what does the company do? The company is involved in basically cloud software. They have all the database systems. So the Oracle database is one of the things that we used to use back in this, university days and so on. MySQL database is one of the things that we've actually used with Java development and so on. So they have now software as a service. They have the bit of AI in it. They've got the all the cloud side of things, and a lot of it now is software as a service, which is quite nice. So a lot of their product is now very similar to basically what Microsoft and Adobe and all of these companies have done, kind of reinvented themselves. So they do have similar software that they used to have before. They innovated in the last 10 years. They've now got software as a service. They've got all the cloud side of things. They still have their legacy software development side of things. And at the same time, they have a new AI. And for that reason, the stock has gone up quite a bit. So a year to date is actually 24%. In the just 1 year is almost a 50%. In the last 5 years has gone up 142%. And considering this is really one of the oldest companies out there, it was interesting to see that. So let's now have a look at some of the financials. Okay, so now you have an idea of what the company does, hopefully. Okay, right now, as you can see, 355 billion market cap. It has a dividend yield of 1.22, and it has a very safe dividend, basically right now 90%. Okay, now looking at the payout ratio, only 29%. They have not increased that dividend recently, so it's one of those companies that not really interested in increasing it every single year, but they will continue just to paying that dividend. Okay, some make that commitment to increase it every single year. Some just say, okay, we will pay it, but we're not really going to increase it every single year. Okay, 14% in the last 5 years, and last 10 years is about 20%. So they basically increasing it very fast when it comes in the long run. And as you can see here, from 2008, where it started paying dividends, up until now, they have been increasing that dividend. But recently, since 2014, 2013, they've actually increased massively, which is nice. So 10 years of increasing that dividend, and $1.60 is what you will get for every share of this company that you own. And looking at the dividend yield theory, for example, right now it says on the 5-year average is $1 and 1.64%. The 5-year the currently is 1.22. So it's actually way lower than where it used to be on an average, which then means it is overvalued according to the dividend theory. And the forward PE right now is basically used to be about 15, but now it's about 21. Now, a lot of this is something to do with the growth side of it. Okay, the company has grown a lot. For that reason, it actually demanded higher multiples, and for that reason, it's actually gone up quite a bit. So this 15 is the, if you like, I will say that's the old Oracle, if you like. Okay, so and as knowing the information technology is actually trading 27 right now, that still seems basically cheap. I'm not saying go away and buy it. I'll show you at the end of what the price targets and so on. So earnings per share payout ratio, 27%, which is basically really good. Free cash flow payout ratio of 42%. The earnings per share from $2.87 to right now $6, so it's growing really nicely. Our free cash flow per share is also heading in the right direction. Just a slight dip this basically next 12 months. And then when it comes to shares outstanding, they have been buying back their own shares every single year for the last few years. And then total sales in basically has been, it's almost stagnated for quite some time. It hasn't actually done much. Okay, and this is probably the reason why the company was trading very, very low multiples, but now last couple of years it's actually gone up basically a little bit. So we will see where it is heading. Right now it seems as the price of the stock has gone up way higher than the total sales are heading, but we will see. Return on equity 498 right now. Return on invested capital is 16%, and operating margins of 29%. Free cash flow margin of 24% as well. And net debt to EBITDA right now we're looking about 3, is below 3 is what we're looking for. Right now is 2.67. Now this is where the company was not Sharia compliant because it has had a very high level of debt, but it looks like they're paying down that debt, which is very, very nice to see. Now going back to Seeking Alpha, we're looking for the earnings estimates. So that's the next thing we need to look at. So 9%, 11%, 14% if we just focus on the first 3. And because the analyst here is 28 people, 34 and 23 different analysts are looking at this company. And then in terms of revenue side of it, 6, 7%, 8%, 10%, 10%, and then so on. So it's absolutely fine. It's not growing as fast as, of course, all the other companies. And like I said, this is probably one of the oldest companies out there. So yeah, it's not basically bad at all. And showing you one more thing. According to Yahoo Finance, next year they're expecting the earnings to grow by 11%. After that is also 11% every single year. So you get basically getting the earnings are growing 11% every single year, which is quite nice to see. And finally, we'll just show you the valuations of this company. So if we go back to Seeking Alpha ratings, it is a buy according to Wall Street, 14 strong buys, 4 buys, 15 hold, and 1 strong sell. Now that is about 3% upside from where we are now, $136 per share. Now looking at Oracle, looking at Morningstar, is just 1 star, which means it's quite expensive. Okay, so 54% premium right now, which is absolutely madness. And they've actually updated this recently, so not long ago, about 8-9 days ago. That basically, probably that's when they reported, they've updated this. So 54%. Okay, the current price of $129 per share, they think the price should be $84 per share. It has a narrow economic moat, and in terms of the total returns in the last 10 years, we're looking for about 14%, which is not bad at all. Okay, now before I show you the final valuation for this company, I want to share with you guys first of all the total performance against the S&P 500 and how the company has performed in the last 10 years. So total return for this company in the last 3 years is 108%. The S&P 500 is 32%. Last 5 years is 162. This is 84 for the S&P 500, and for the last 10 years 281%, and S&P 500 is 178%. So it has beaten the market, which is quite nice to see, and of course that includes the dividends and everything else. Now just to quickly showing you the final of everything. So Morningstar, we've seen it's $84 per share. Seeking Alpha, $135 per share. Simply Wall Street has said $113 per share. I've used the multiple valuation model, and that gave me $133 per share. Average all 4 up, you get $116 per share. It's $131 right now, 11% difference right now, so it's expensive, okay, according to where we need it to be. Again, on top of that, you might say I want a 5% average, and that will give you about $110 per share. And for that reason is of course, if you hold it, if you have the stock already, hold it. If you're not basically a shareholder yet, maybe you might take your time and wait a little bit more if you're interested in this company. I'll be honest with you, the growth is not there for me to even get excited about this company, considering how expensive it is. This 11 basically percent, 9%, it's not massive. Okay, so for that reason, I wouldn't actually touch it. I will probably look for other companies, similar sort of industry, that are growing slightly faster, and even if they are trading higher multiples, I'll be willing to take a risk on those rather than this one. So anyway, that's my take on Oracle. I hope you're enjoying the content. Please, if you do, of course, join us in the Patreon account, as well as, of course, liking the videos. Have a wonderful day. Assalamu Alaikum.